Okay, you can see it? Okay. Okay, so I want a disclaimer here that I am not a tax professional. I am an office manager, and I have been an office manager for 17 years. So I have paid all of my executives' receipts and then all of their books for the last 17 years. I do prepare my husband's stuff for our tax accountants. So we do use an accountant because he has his own company. And with that being said, I've learned a lot, and I learned a lot while trying to put stuff together for the multi-level marketing portion of taxes for Beachbody. So first off, go with everybody needs to either file with their own social security number, or they can sign up to be a sole proprietorship. And a sole proprietor is basically a business that has no legal separate existence from its owner. So what that means is that the income and losses are taxed on an individual's personal income tax return, meaning that you and your company are one. So there's no separation between a business and your personal taxes. They're one and the same. You need to file a Schedule C, and that is something that you can get online. You can print it. Just go to, just look up Schedule C, Form 1040, and you will find that form. But again, I would recommend that everybody consult a personal tax consultant, especially when it comes to the multi-level marketing portion, because that is just a whole different entity in itself. So most businesses like Rebecca, who is going to one day be a Melanie Mitro, you end up having, you start as a sole proprietorship, and you can change your business to a LLC or to a corporation as things go over time. But it's just easiest to do it now as a sole proprietorship. So it is the easiest form of business with which one can operate a business. Again, it's not a legal entity. So when it comes to corporations and LLCs, mainly with corporations, you have to have a board of directors, and you have to have people issued to do and vote and voting rights and that kind of stuff with a corporation. So that's when things get a little bit crazy, but that's what separates your personal finances from your company's finances. But again, with a sole proprietorship, they're one and the same. So you can, as a sole proprietor, you can either do business under your own personal name and use your social security number, or you can get a trade name like Nancy's Nutrition and Fitness. And by doing that, there's no, it's a fictitious name, although it does need to be registered to you. It does not create a legal entity separate from you. It is still your name. It's just a name that you are using. So does that make sense to everybody? So you're still one and the same. So like my husband's company is called 5280 Custom Builders, yet we file taxes for both of us, and we file them jointly for us and his company in the same filing. The sole proprietorship is really popular just because it is so simple. It's easy to set up, and I think it's $50 to set up your business name, and that's it. Then you get what's called an EIN, which is an employee identification number, which is separate from your social security number, but yet you can use either. If you have an EIN, you need to use the EIN. If you don't and you use your name, then you can use your social security number. And the income earned as a sole proprietor is reported income and losses by filling out the Schedule C along with the standard 1040 form. So it's just an extra form that you need to fill out, and there's things that you need to itemize along the way. And later in the PowerPoint, I'll go over exactly what needs to be itemized out. So Your profits and losses are first recorded on your Schedule C, and that's filed with the 1040 form. And then the bottom line amount from the Schedule C is transferred to your personal tax return. So this is it makes it simple. So it's kind of like either you've gained income or you actually even can incur losses from your business if you've, had more expenses than you've had income. So, and then yes, you can file a joint tax return. Like I was saying with me and my husband, I file my earnings from my company. He files his Schedule C, and we do it together as a joint tax return. So that is completely fine and normal, and you can do that. The advantages of a sole proprietorship are that the owners, it's easy, it's inexpensive, and you don't have to have board of directors in order to have the business. You don't have any ongoing formalities such as that board of directors. And then you don't need to pay any kind of unemployment tax on yourself. And you don't have any employees, honestly. So, and then you can freely mix your personal assets with your business assets. So the disadvantages are that the owners are subject to unlimited personal liability for the debts and losses of the business. So what that means is if there was a problem and you run into financial trouble, creditors can bring lawsuits against the business owner, meaning your personal assets. If such suits are successful, the owner will have to pay the business debts with his or her own money. So that is the one downfall of having a sole proprietorship. But again, it's the easiest form of business to get. Owners cannot raise interest capital by selling interest because there's no interest to sell. And then if you were to pass on and die, then basically your sole proprietorship dies with you. It's not a company that can continue on in your passing. So there's I wanted to go over a little bit about a business versus a hobby, and mainly I wanted to do that because there's people like me who have a full-time job, and I'm doing the Beachbody business, and I'm trying to grow the business, and I want to be able to make sure that, and I have a 1099 that I received from Beachbody for the earnings that I made last year, but it's not a significant amount. And I have more expenses from Beachbody than I do income. With that being said, then you need to make sure if you are really wanting to make this be a business, you need to be able, and the IRS can come to you and say, you need to prove to me, or they'll go to your tax accountant and say, prove to me that you are a business and that you are not a hobby. So it's really important to know the difference. So obviously a hobby turns into a business most of the time without the hobbyist meaning it to. So if you're earning an income from your hobby, then the IRS will require you to pay income tax on it. So whether you consider it a business or a hobby or not, if you've gained income, you need to pay taxes on it. The difference is, and I'll show you in the next slide, the differences and what it is that you would need to show the IRS what it is that makes you be a business versus a hobby. So if an activity is conducted with an intention to make a profit, then it is considered a business. A hobby, on the other hand, is done for recreation or pleasure and not for earning income. So if you consider yourself to be a hobby, you cannot use your income as a tax shelter. You can only claim expenses up to the amount that you earned. So what that means is if, let's say I made $2,000 this year on Beachbody, I can claim expenses up to the amount that I earned. So I can only claim $2,000 dollars worth of deductions, even if I had $5,000 from going to Summit and paying for hotel and blah blah. I mean, if I was to take all of that expense, I could only make it a cap to what was earned. So that's what happens with a hobby versus a business. So this is what the factors that the IRS uses to determine if an activity is a hobby or a business is whether, for one, it's done in a business-like manner, whether the amount and effort you spend on the activity indicate that you want to make it profitable, whether you depend on the income from the activity for your livelihood, whether you change your method of operating with the intention to make the activity profitable, whether you or your helpers or advisors have the knowledge and skills to turn the hobby into a successful business, whether in the past you had turned a similar hobby into a successful business, whether the activity has made a profit, how much profit it made, and whether there is a possibility of making profit in the future, whether the losses you incur are typified as business in its startup phase. So in the business phase in the beginning, you can have losses. There's no reason why you can't. A lot of businesses do have losses before they make money. So that's not an issue. One of the other questions they ask is, has your business made a profit in any 3 out of the past 5 consecutive years? Do you have business cards? Do you have a well-maintained set of books? So even in that regard, when you're talking about books, even your invite list, you know how you go through and you have your invite list and you cross things off and you go back to people, even that would be like, hey, look, I've got this set of books of people that are, that are interested, or that I've been trying to, get onto the Beachbody product, that kind of thing. So that's also the type of books that they're looking at. A credit card with a business name on it solely, a current business license and permits for your state and or city, and then advertising or other marketing efforts that all helps to persuade the IRS auditor that your activity is really a business. Does anybody, I have questions at the end, but does this all make sense to everybody so far? Yeah? Rebecca, you good? Okay. Okay, so how do I set up my business name? Okay, first you go to the website, the Secretary of State website, and you look up trade names. And you do a search for the trade name that you want to use. So if you want to use Nancy's Nutrition and Fitness, you look and see if that's already out there. If it's available, then you want to use that particular name, then you can sign up, and it just asks for your name, your address, your social security number, and you enter that information, you pay the fee, and you will get an employee identification number. So that is how you register your business name. Again, it's not a it is a trade name, but it's still tied to you and your personal assets. So that's the important part about that. So it's really super simple to do that. So then we go back to, let's say now we want to what do I need? Sorry, I can't read. What do I need in order to file my business taxes? Well, first off, you have to have important record keeping. You need to keep really good organization of track of your expenses and your income. So you should have a file, an Excel somewhere, have all this information to see what your earnings, see what you're putting out. And then you do have to actually itemize it. And you'll have to itemize it for the Schedule C, and you'll need to give that to your tax accountant. So you should have received a 1099 from Beachbody for the amount that you earned in 2016. So you will, in turn, break down your expenses and keep your receipts, and you need to keep a detailed record. All year, you should add itemized expenses to the spreadsheet used for keeping track of the categories allowed for your deductions for that calendar year. And by doing that, it just makes it easier, because then you can total up your sums as you go, and it just makes it much, much more easier to just grab that number, as opposed to going, oh no, now it's time for taxes and I've got to pull out all these receipts and go through all this stuff. And it's just more difficult if you do it that way. So you need, in turn, to keep your business tax returns and supporting documents for a minimum of 3 years. It's actually suggested that you keep them for 7 years, because during the 3 years of the tax returns, the tax returns can be amended or audited. And if you fail to report any kind of income, however, the IRS can ask for your tax records for up to 6 years late, before that. So it's best to have them on hand. It's better to be safe than sorry. Nobody ever wants to go through an audit, and nobody ever wants to go through it unprepared. So this is I'm going to just go through this really fast. There's a lot of writing on these, but it really kind of gives you an idea of what this is. There's 21 tax deductions for network marketers, and it's actually for all businesses, but this is a little bit more in detail as to what it is that you can deduct on your taxes for these purposes. So number one is advertising. So any business cards, buying leads, flyers, like purchasing, if you purchase the Year of Hootsuite, any type of ads that you purchase for your phone, any kind of monthly fee for that, newspaper ads, postcards, all that kind of stuff is, anything that's considered advertising. In fact, advertising also would be like the purchase of Beachbody logo wear. So if you buy something that says Beachbody or Country Heat or Hammer and Chisel, whatever, it has to have a Beachbody logo on it in order to use it, but that's considered advertising. If you take your car or your truck expenses, if this is your full-time job, you can do your standard mileage. So if you choose to go to coffee with somebody and you talk about Beachbody for any time during that, you can write off your mileage. If you're not doing a lot of driving for Beachbody and going to Super Saturdays and, driving, like Rebecca, if you drive to see your sister to go over books or something, you could use those miles for deductions if you're going to be doing business with Beachbody. So that can all be used for deductions. This year for 2016, 0.54 cents per mile that you drive can be written off. So that can actually add up to quite a bit pretty fast. Now, my husband uses a program called Mile IQ, and it's on his phone app, and it costs him $50 to $60 per year, but the IRS accepts this application. Again, that would be a write-off for the Mile IQ purchase, and then yet every deduction, it's there. It's a little swipe. You swipe whether it's personal miles or you swipe whether it's business miles. So it's really easy, and then you just download the information onto your computer and you print it out and you give it to your tax accountant. So it's very accurate, and it's very, like I said, they actually they accept it. So that's always a good thing versus writing down your starting mileage and then writing down your end mileage. I always forgot. I never remembered to write it down. So that was always then I'd have to guess. So anyway, but you can get a little mileage book at Office Max if you don't drive a bunch of miles, and just try to remember to write down the miles that you're using. You can also record like your oil changes, repairs, car payments, insurance. It just depends on how much you're using your car, whether it's worth it or not. If you're only using your car, once a week, driving to Starbucks, it's not worth it to take a portion of your car payments or your insurance, because it's just not worth it to do that. So the other one is commission and fees, and this would include like fees you pay to set up a booth at a trade show, company websites, renewal fees for your company, any PayPal fees. So like when we did the dinners for Summit and we went with Jatana, we paid Jatana via PayPal. Not what we paid, but the fee that we were charged by PayPal is what we can use. Contract labor. So if you hire an independent contractor, so even such as your tax consultant, you can use their contract labor. Anyone to create like a custom ebook cover, do blog post, freelance, any of that is considered a contract labor, and that is a deduction as well. Home office deductions, so meaning part of your home, using your home office, like Rebecca, you have your office right there at the house. Those can be used as a legal tax deduction, although a lot of people are afraid to use it. And the reason why is because your office needs to be used exclusively for your network marketing business. So if you don't use it for exclusively for your business, then you can use a percentage. So for example, if your home was your office is 5% of the total space in your house, you can deduct 5% of your home expense. You can also use such as utilities, gas, water, sewer, etc. But you need to be careful. So this is one where I would definitely talk to a tax consultant if you were going to use part of your home as one of your deductions. So, but it can be done, and people do it all the time. Interest. So most network marketers don't have this expense, but it would be like if you have your credit card exclusively for your business, then the credit card interest that you compiled on that card could be written off on your taxes. So inventory and cost of goods sold, we really don't have inventory, so that's really not, it's not like we're selling stuff off the shelves. It comes directly from Beachbody. Your legal and professional services, so your accountants, lawyers, bookkeepers, anybody that you use to hire for this purpose, can be their fees written off. So then meals and entertainment. Now this is touchy because you can't deduct your own meals. So if you went out to lunch by yourself because you were shopping that day and you're looking for workout gear, that doesn't mean that you can write off your lunch. So what it means is that if you were to take a friend to lunch and you were to talk to them about Beachbody, you could pay for both of your meals, and then half of that, so basically one of the meals, can be written off on the taxes. So then if you were decided, let's say you're going to have an open house and you're going to have a whole bunch of people over and you're going to talk about Beachbody and you bought all kinds of food and stuff for the party, now all of that would be deducted because you're actually buying it for the specific purpose of trying to raise coaches or something that had to do with the business. So then your office expenses. So that would be meaning office supplies. So your printers, your ink, your toner, your paper, your pens, all of that stuff can be deducted. But again, so it's like with my husband's company, we use our printer for personal and for his company. With that being said, we split it in half. So half of it is used for personal, half of it is used for business expense. And that is just fine. So that's important to know. Supplies in general, just, anything used in the course of the trade or business may be deducted as a business expense in the year that it's used. So you have to be careful to avoid deducting expenses as supplies when they're actually capital assets. So a capital asset would be something large that you want to depreciate over the years. And I really don't see anything, maybe if you bought a new Mac computer that you would want to put down as something that would be a capital asset because it's very expensive and you would want to deduct it over a couple of years as opposed to just one. And then also the travel meals and entertainment. Now that's a whole different story than just going to lunch with your friend. If you're actually traveling, like this year going to Summit, any of the meals that you purchase, any of the hotel, the airfare, the car rental, any of that, you can use that for a tax write-off, and especially if it's away, from home and are overnight. So, but they must, these trips must be business related. So, you can visit the IRS website to learn a little bit more about this, but it is one area that people do mess up a lot. So it's probably best to, make sure that if you're taking a trip, and you are, like Summit is specifically Beachbody, you can do personal, but you have to split out that cost. So if I was to go to Summit 2 days early, then those 2 days that I'm there, I can't use that hotel fee or car rental. Narnia. Sorry. My cat's pulling stuff off the shelf. So, but anyway, so you just have to be really careful, because if you ever do get audited, you have to prove and show them that this truly was a business expense. And then communication. So your cell phone. So is your cell phone used 100% for Beachbody, or is it used 90% for Beachbody, or is it used 50% for Beachbody? You can write off. You just have to know what the amount is, and just take your best guess, and they'll, and then divide what your bill is every month and split that percentage and put that as your communication deduction. And then there are miscellaneous. There's not a lot of stuff that falls into miscellaneous, but it needs to be, again, a legitimate business expense. So there's more deductions that are not common. I'm not going to go into those because there's really not a ton that we will use. Depletion, I couldn't even find really anything on it, so I don't even know what to say that is. The depreciation, like I said, if you have purchased a huge laptop, a really expensive laptop, and are using that can be depreciated. Benefit programs, insurance, pension and profit sharing, and then so then if there's any employees on your payroll, which we don't have, so because we all are individual people, in the multi-level marketing. So those are the things that are specific on this Schedule C. But now this is stuff that I found that is specific to Beachbody with deductions. So can you write off your monthly coaching fee? Yes, you can. Can you write off your Shakeology? No, you cannot. Anything you consume personally or use, Shakeology, DVDs, weights, bands, anything that you purchase to use in your business cannot be written off. Now, you can write off logo wear. So Beachbody products, like I said, that say Country Heat, Hammer and Chisel, PiYo, P90X, Coach, Beachbody Coach, all of that can be written off because it is Beachbody advertisement. You're out there, anything that says Shakeology, you can use that. So can you write off items that you purchase as prizes for your challenge groups and your downline coaches? Yes, you can. You need to save the receipts. The one thing that's really important about this stuff is you need to write down what it was for and who it was given to. So, do you need to keep receipts for all these things? Yes, because if you ever get audited, credit card statements will work as well, but you just have to know the 5 W's. So who, what, when, where, and why. So that's the really big thing when it comes to having your receipts and your buying stuff for challengers. So that's really, like I said, the most important part. I'll get to your questions in just a minute, okay? So let's see, how much do you need to earn in order to file with the IRS? It is best to file no matter how much you make, but you will get a 1099 from Beachbody only if you've received $600 or more. So if just be for sure that you need to file, I would say you need to file no matter what. Because then again, if they were to come to you, if you ever were audited for any other purpose and found that you earned money and you never claimed it, then that opens up a whole brand new can of worms, and you don't want to go down that road. Can you deduct your workout shoes and workout clothes that you buy from Fabletics, or you go to Dillard's and get the great Nikes? No, you cannot. So too bad. Anyone that just purchases clothes to go to work can't write them off, and this includes us too. So we can't do that. So then also any beauty, makeup, eyelashes, those kind of things. Nope, can't write those off. That's something that we're doing to try to make us look better in order to promote the business, but it's not anything that we can deduct. And then can you, like the personal development books? No, you can't write those off either. So the best advice is to hire a tax preparer that is familiar with network marketing. Someone who understands the hobby loss rules and can advise you on how to operate your business as a professional. Give them all the facts and let them tell you what you can and cannot deduct and whether you should file as a hobby or a business. So that pretty much is my thing.
Hey, would you mind going back to the slide? Because I've been taking pictures, just screenshots, so we can, unless you can post them. But the one that started with number 3.
The specific was Beachbody?
Yeah, the tax deductions.
This one?
No.
The first. Okay.
Yeah,
this
the
one?
next one. Yep, the next one.
Okay.
Yep, thank you. And that way we can just have them in Life Changers, because, it'll be very beneficial to go through those things. Perfect. Thank you.
Yeah. I know I'm not a great speaker. Sorry. That's why it's like, okay, let me just put it down.
You did perfect. Perfect.
There's a lot of stuff to go through when it comes to taxes. And so with that being said, it's, you don't want to screw up. I mean, you can make mistakes, don't get me wrong, but you don't want to, like, okay, well, like in my case, would I file as a hobby or would I file as a business? Well, I'm going to file as a business because I really am trying to make this be a business, and I have proof that I'm trying to make it a business. So that's so that's what I'm. How do I see chats?
So go up to the chats. Yeah, Melinda was asking about the sample packs that we give to customers for Shakeology. Like if you hand out the samples.
I would tend to say if you're giving them away, then yes. So you can't, anything that you personally consume, you cannot claim. It's like I have packets of Shakeology and I'm probably 8 to 10 of them away, just to have people try them to see if they like them. And, but I'm going to just take that as a loss for me, I guess. Mm-hmm. So, because I would rather they can purchase samples online if they want to do that on their own. I know that's kind of a pain in the butt, but I think that's what it's out there for. So for me, I'm going to try my best to not bring any attention to me by the IRS, because for one, my husband has his company, and for another, with me adding this on top of it, it's like, okay, now I have 2 Schedule Cs that need to be filled out for 2 different companies. So I just want to make sure that I'm not doing anything. And I don't think it's a big enough amount. I mean, Melinda, how much are you giving somebody? Are you giving away, a whole bunch every month, or is it just like piddly amounts here and there?
I actually have started giving away quite a bit. So I have the names. I know exactly who I've given them to so that I can track that, and how many and that sort of thing. But I probably, well, now we're in a new year, but I would venture to say with the way I hand them out, I will at least go through at least one whole packet, or whole
So
box.
24.
Yeah, which would at least, if not more, because I probably handed out close to that many, if not that many. I'll have to add them up last year, because I started towards the end of the year giving them to people that I had been talking to and asked for them.
Right.
And
right. So then you I
see
bet
that
you,
changing.
I bet you could, because you're giving them away, and it is a cost. Just write down on the receipt who you gave it to, and when, who the five W's: who, what, when, where, why.
Okay.
So just as long as you do that and you have record that that's what you did, then that's great. But if you're doing it, every month, and yet you're not having any that they see that you've consumed, that you've purchased.
Yeah.
You know what I mean? As an added expense, I would think that they'd be like, okay, now she's claiming her Shakeology, which is a no-no.
Right. And it specifically says on some of my receipts, obviously it specifically says the packets. Obviously I'm not handing out a whole bag of Shakeology.
Right.
But the packet, sure.
Right.
And then I had a question also on, you mentioned, like, because I've been thinking about having like a come see Sunday, and having people come and try a workout, try Shakeology, show them what a day's meals would be. You're saying all of that would be deductible, like whatever cost went into that kind of thing?
Yes.
Awesome.
That is correct.
Perfect. Thank you.
Yep.
You can totally come out of your screen share if you want to, Patty.
Oh, okay. Are you done?
Well, if you have stuff to share, or
no.
From that.
Hold on.
You go up to the top, and it'll be.
How do I get out?
Go up to the very top, and up, like even up further.
Click on new share?
Yeah. It'll say, keep going up. Like once you're up, there will be a drop down thing. Although you are with the Mac. Is there a view options thing? Go to your view options. Maybe I can get you out.
Stop share. There we go. There we go.
Yay.
Okay.
Because you're always the good picture taker too. So. Although nobody's faces are on here tonight. Maybe we have ceilings.
There's Miriam.
What?
Okay, well then we need peeps.
There's Cassie. Cassie. Everybody calls you something different, girl.
What is it?
Casey, right? Yeah. There's Lydia. Like, yeah. Where's Phyllis?
Hold on.
Phyllis doesn't have a shy bone in her body. What is Phyllis doing? Although I have had team calls too, where I've had to be on. Literally, I was in the shower. I don't know if any of you guys were on that Emerald call with the with. I was getting ready to say Suzanne Summers. No, with Summer Tucker. I was like, I can't come off of mute.
Okay, Miss Melinda.
Face.
We're going.
Everybody smile. Patty, can
Melinda.
you?
She's like, I'm putting my hand up. Okay, we're good. Oh,
you get it?
I know tax stuff is boring and all that, but it really is important. And
no, it is
our first year of filing. So,
and Jatana has always said, she's always told me, she's like, start your own bank account, start your own bank account, start your own bank account.
Yes,
it's so much easier.
Again, because like I said, if the IRS comes to you and says, okay, well, how, are you a hobby or are you a business? Because, you're using this as a tax shelter, then you don't, you're like, I gotta prove that this is really a business. So by having your own bank account, possibly your own credit card, having your own, have all of your books, even like I said, even with your invite list and having those, it shows that there's a record of repeat of trying to get business. I'm talking about my cat. So it's a repeat business and that kind of stuff. So, it's just proof. It's like, I mean, I've purchased Hootsuite, I've purchased Ripple, I've purchased, I don't know. I mean, there's, a couple phone apps that are just cheaper, but, purchase some phone apps. So there's things that I've purchased that, are deductions. I mean, Hootsuite was, I think, $120 or something, for the year. So there's stuff like that, yeah, well, it's advertising, and that's how I'm working with my challenge groups. And that's how I'm going to use that to, that's a deduction.
Maybe even what about iTunes if you're using songs for your movies?
I don't know about iTunes. You'd have to ask somebody, because the thing is most of the stuff on iTunes is already,
you're already using it.
Well, you're using it, but it's not yours. I mean, you're using somebody else's song. So I would say probably not.
I was thinking Zoom is definitely one if anybody's purchased.
Yeah, Zoom, you can, because isn't there a fee with Zoom? Mm-hmm. So yeah, I think I actually have it in there I even put Zoom on there. Oh, I think I did with the phone communication, Zoom. So any fees that you pay to have Zoom calls, yes, you can deduct those.
I'm curious about what you mean as a tax shelter. And sorry, Beck, you can't see me. I couldn't find my button to let you see me.
That's okay. So what that? Okay, so as a tax shelter, what that means is that you are basically using your hobby, quote unquote, as a part of your income, but your losses way exceed your income. So you're using that loss to deduct your primary income, is what that's basically meaning.
Okay, that explains why my accountant had me do my taxes the way she did, because I have another business where I already have an EIN. I have a little shop. And just for those that are asking the questions, because I didn't get the 1099 obviously from Beachbody, but I did keep like I bought a box of the 24 shakes solely to give away for challengers, and it's the record keeping.
Very
and
important.
Mine came out as such a loss just because of the few months I did it and what I did recover from Beachbody, that's why she never used the term hobby versus business. That's why I ask you that.
Right. So that's what a tax shelter is using your losses to reduce your personal income. So because I have a full-time job, if I was to use that, I'd have a pretty big loss from the company, from Beachbody, that would deduct from my
That explains why she had me do mine the way I did them. That's wonderful. Thank you very much.
Yep.
Anybody else have any more questions? Anything? Does anybody want to get any pictures while we have more faces on?
Well, I don't think Phyllis was on there, so let me do that another one real quick, okay?
All right, Melinda needs a turn.
Melinda, quit shopping in your closet. Okay, you ready? All right. Okay.
Very good.
I'm packing for a trip, so my daughter's got a cheer competition, so I'm multitasking.
Good. I'm just picking on you.
Fun.
So, Rebecca, do you want me to give you this PowerPoint, or?
If you, I know PowerPoints, you can't pull them off as pictures, can you?
Probably
I don't think
not.
you can. Do you know, just a side note too, you can use Canva, and you can do PowerPoint pictures through Canva, and then they're actually pictures if you ever want to use them as slides. Yeah,
Okay.
yeah. I mean, definitely keep if you want to put the PowerPoint maybe in, but it's going to download as a file.
Okay.
Right. And
I don't have to, but but the thing, I got it most of my information came from Forbes.
Yeah.
And so that's very reliable source.
Yeah,
And then
that's perfect.
so other than the stuff that I found about, and one of my girlfriends actually does taxes for lower income people. And we discussed the, like the Shakeology and stuff like that. And she's, and even what I read online, it's like, no, too bad because Shakeology is expensive, but nope, it can't be written off. So.
Well, that's the thing too. And I was thinking about that, because a lot of people will, and I definitely, we think that too, like, it was a loss, but, it's kind of, for me, like, I really do see where my grocery exchange, like, I'm not buying the cookies, the candy, the junk food, all of the, restaurants and the ice cream, you know what I mean? Like, I save money from being on Shakeology. So in one way, unless you just buy it and you aren't using it at all, then yes, that would be a loss. But, I'm just thinking a little deeper into that. I love my Shakeology. So,
yeah.
but this has been a very, very valuable call. And I definitely took pictures of the screenshots of the things that you can deduct, because that's so important. Like I have a thing right here too that I keep all my receipts in. Changing over the checking account, that'll make things easier.
Well, you just have to have something specifically, like because like I do have a specific Beachbody account that like all of the money that I make from Beachbody is deposited into, and it's separate from my personal account. So I just from the beginning started doing that. And so that's
yeah.
It's for one, it's how I know what I'm making Beachbody wise and know what I'm spending, because most everything that I try to purchase from Beachbody comes out of that account as well. So, it just kind of keeps a record of your expenses and your deposits. So, it works well. So makes it a little bit easier to not have all of the legwork, but it's like when you have receipts, and I know it's a pain in the butt, but whenever you have a receipt and you come home from, doing lunch with your friend and you get to do that, you write your friend's name on the receipt and you wrote why you did the lunch. And then you put that in your little Excel spreadsheet and you file it away. So, because a year later, when you go back to look at that receipt, you're going to go, I don't know who I had lunch with, and I don't know why. And and I have to do that with my company for all the expenses. Even if I have an all company event, I have to list everybody's name. So you're talking over 400 people's names have to go into a thing. So, it's like, pain in the rear. So, so it's very important that you do have the person's name, and I don't know why, but you do. So just note that that's really important. So.
Very good. This has been such a helpful call. Thank you. And I was thinking, first of all, does anybody else have any questions as far as taxes or your business or anything? But I was thinking too, you've done such a great job. I would love for you guys, like all of you guys, I'm gonna post it too in Life Changers, for us to have like a team call sign up. Because trust me, like after a year, I'm like, what else am I going to talk about? So this has been so refreshing to have you on, and we've had some other guest speakers, but if any of you guys have any topics, just be thinking about that, because it would really, you guys are a team. So if you have anything that you guys can bring, even if it's like a 20-minute call, it doesn't matter. That's fine. Just something of value, or maybe you found a video or something that you think that the team would benefit from. We can play a video. Well, that'd be awesome. Just help your mama bear out. Because I'm like, what are we going to talk about? Next week, we're going to talk about 1 Minute Manager. I want to just kind of go through the quick little points of that, and then we'll open discussion it. So, all right, guys. Thanks again, Patty. Appreciate it so much.
Welcome. And it took a little while to get it all put together, find all the information, because you can find anything you want. You can make anything read the way you want. I found a lot of people that said, oh yeah, you can deduct Shakeology, and you can deduct your workout clothes and your shoes, and you can deduct like, guess what? You know what? I know better.
Yeah, good for you.
So, yeah. So,
I know
no.
you worked hard on that. You worked hard. You put a
So I
lot.
had to, like I said, I had to find reliable sources that, that I trusted in order to go through to get that information. So
Yeah,
anyway,
that's
like I said,
awesome.
I'm not a tax person. Talk to your tax professional, before taking what I say as as the Bible. But yeah, it just, yeah, like I said, I've been doing it long enough and been doing my husband's stuff for our tax accountant long enough to know what it is that we can and can't do as well. So
Very good. Very, very good. All right, guys. Have a great evening, and we will see you on the team page or in our thread. All right. Love you guys.
bye. Thank you.
Thank you.